Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with another week of the weekly news here with Nick Bendel. Welcome, Nick.
Well, it is really, really good to join you again, Owen, and thank you for making the time because I know you haven't been feeling well recently.
Oh, that's all right, Nick. It's I'm still alive and kicking, but yes, it's given me a raspy voice. So if I sound a little bit different, it's not my microphone playing up.
Okay, well, I like the voice. I think it gives you a bit of character, maybe even a little bit of mystery.
Right. Okay. Well, I'll see how much of that I can keep longer term.
Well, that sounds good. And while you've been struggling with the illness, I thankfully have been happy and healthy. And recently, I wrote a couple of award submissions, one for a mortgage broker, one for a credit repair agency. And for those listening to this, wondering why I would have done such a thing, well, my business, Hunter and Scribe, we're a copywriting agency. We write content for finance professionals throughout Australia. We work with a lot of mortgage brokers and credit repair agencies as well. And we write a lot of award submissions, and we're very good at it. And hopefully, those two particular clients go on to win their respective categories.
Very good. Well done, Nick. And yes, thankfully, I've got a good team behind me here at Leifield, so that all the property management across the country keeps on going on a day-to-day basis. So I'm very grateful. So yes, but we're here for the news, Nick. What news have you brought us this week?
Well, speaking of mortgage brokers, I think we were both pleased to see our first story, mortgage broker market share hits new record high. Brokers settled a record 76.8% of all new home loans in the March quarter, up from 76% in the December quarter and 74.1% a year ago, according to data from Comparator. MFAA Chief Executive Anya Panek said the data shows how central brokers have become to Australia's mortgage landscape. Since the Reserve Bank of Australia's interest rate cut in February, our members have been reporting increased levels of inquiries and activity across all borrower types, whether it's clients looking to refinance, invest in property, or buying their first home, she said. So, Owen, broker market share, it just keeps rising and rising and rising. Why is that? Why does broker share just keep going up?
Oh, for some very good reasons. Number one is service, and then providing choice to the consumer, to the borrower, and third is just accessibility. It's and when you combine all those three, where a broker can actually provide you advice of which product is best for you and your situation right now, rather than you having to do all the research, going to umpteen number of banks and lending institutions to try and work out what's going to be best for you. So why wouldn't you go to a broker is really the question.
Yeah, I've been wondering that myself. I don't understand the 23% of people approximately who go direct to lender. So we're at 76.8% now market share. Do you think, Owen, that broker market share will hit 80%? And if so, when do you think we'll get there?
Yes, I think it definitely will hit 80%. Although it might be a slower road than it has been from, say, 60 to 70%. And and we'll probably get maybe a bit more than 80% in terms of market share for mortgage brokers. In terms of when, we can see that the percentage increase is starting to slow over the last year or two. And that's understandable because there's been some pretty hefty hikes in that percentage in the last 5 years, and and as we get closer and closer to 80, 85%, that increase will probably start to slow. The rate of increase will slow quite dramatically.
Okay, so you're saying we're going to go beyond 80, maybe up to 85. Do you think we'll ever reach 90?
It might be possible, but in terms of and we're only talking about residential lending here, aren't we? So it might be possible, but I think there'll always be those cases where some borrowers need to go directly to the bank, where it's might be tied in with business lending. The residential lending, comes along with it. Or some people are just comfortable with the lender they're with, and they might be doing top-ups or increases, and they just decide to go directly to the bank they're already with. So I think there'll always be at least a 10 to 15%. If we were to get to 90%, I think it'll be a fair way down the road.
Yeah, it interests me that some lenders, or mainly the big four banks, are still, even after all this time, raging against mortgage brokers and muttering about trying to claw back market share. Whereas I don't understand why they don't just focus on improving their processes and the products, and therefore let the brokers direct clients to those lenders, and they'll get more business that way.
Yeah, well, their profitability is tied to being able to upsell and cross-sell to their mortgage clients, and when they've got brokers as an intermediary that are stopping that process happen, then it adversely affects their profitability as a bank, or I should say as a business. Because their profit doesn't necessarily come from normal traditional banking products, it comes from all of the upsells and cross sells. Yes, for them to be able to get that direct access to the customer at time of signing up for their mortgage is very important for them. But that's why you probably see the market share dropping, because the customer, the consumer, the borrower isn't really interested in being upsold and cross-sold. So they want the best product for them at the best possible rate. And that's where brokers really provide their value.
Amen. Well, we've talked about home loans for our first story. For our second story, we're going to talk about property. Property market tipped a party like it's 2021. Ray White chief economist Nerida Conisbee has said the property market is about to experience another boom. She said, Australia's housing market acceleration, which began in January 2025 after just 2 months of price declines, has exceeded all expectations and is now pointing toward a dramatic reshaping of the national property landscape by the end of 2026. Current trajectories suggest Perth and Adelaide house medians will breach the $1 million threshold, while Sydney appears destined for a $2 million median and $1 million units. Only Hobart and Darwin will retain house medians below $1 million. The momentum that began with January's recovery has intensified significantly following the Reserve Bank's second interest rate cut in May, with additional rate cuts anticipated before year's end. What started as expectations of modest growth has evolved into conditions similar to 2021, far exceeding early year predictions, she said. However, Conisbee said several factors could prevent another boom. Quote, rising unemployment resulting from slower global economic growth triggered by trade tensions could weaken buyer demand, despite interest rate cuts providing some offset. Perversely, the current surge in prices may kickstart more development projects as margins become attractive enough to overcome construction challenges, ultimately increasing supply. However, given the time required for new projects to reach market, any supply response would likely take years to meaningfully impact prices. Very interesting comments from Nerida Conisbee, Owen. We know prices have been rising for several months, but is it right to say that this is the start of a new boom?
Yeah, saying it's the start of a new boom might be a bit too optimistic right now. It's certainly a definite change in sentiment in the market. So to a more of a positive one. But we're yeah, as you've just um, uh, read out there, there's a lot of other factors that could negatively affect the market for the remainder of the year. And yeah, we need to wait and see what happens with those. It's yeah, there's a lot of issues happening in the world at the moment, economically and geopolitically, which are all going to affect our economy. So yeah, we need to see those out, I think, first before we can definitely say that we're going to see another boom.
Well, Nerida Conisbee made the point that falling interest rates are stimulating the market. Is there anything else putting upward pressure on prices?
Um, just the things that we've been banging on about for a long time here, Nick, which is the lack of supply, the red tape of yeah, government red tape to be able to start producing more supply, and yeah, the rising cost of labour and trades, and the rising cost of materials for building. So all of those factors are still in play. Um, they're not as bad as during, say 2 years ago, in the tail end of the COVID years. And so things have improved, but there's still a problem, and they're causing issues with more supply in the market.
Well, Nerida Conisbee, another interesting point she made, she raised the idea of Sydney's median house price reaching $2 million. She says we're on track for that to happen. $2 million for a median house price. What would that mean for people on modest salaries living and working in Sydney?
It means that it'll be very difficult for them to get into the market, and they're going to have to focus on um, where they can buy for what their incomes can afford them. There's
Yeah,
plenty of government incentives out there to be able to get into the market, and yeah, people have to make some life-changing decisions, maybe in terms of where they can live, where they want to live, to be able to at least get into the market if they want to take advantage of any government schemes to be able to do that.
I'm thinking if you're someone with a lower wage job, maybe you work in hospitality or you're a teacher or you're a cleaner, you're probably going to be renting maybe far out, kind of an outer ring suburb, and perhaps working in the inner ring. And if median house price is reaching $2 million, the only thing you could afford would probably be right on the fringes. And if you can't buy there, I guess your options are you're renting for life, or perhaps you're leaving Sydney.
Yes, or becoming a rent investor. And there's numerous options now to be able to do that and to be able to get into the market. So there's a lot more opportunities and and options for people to be able to get into the property market now, um, while at the same time it's the difficulty of maybe wanting to buy the house that where they want to live is that opportunity is becoming more and more difficult. So I think we just need to become more educated about other options other than buying the house that we want to live in.
Let's move on to our final story for today. Economy remains stagnant. The economy grew by just 0.2% in the March quarter, according to the latest data from the Australian Bureau of Statistics. but in per capita terms, the economy actually shrank by 0.2% as the population grew faster than the economy. In annualized terms, the economy grew 1.3% in nominal terms, but contracted 0.4% in per capita terms. Another way to put that, Owen, is over the year, the pie got 1.3% bigger, but everyone's share got 0.4% smaller. Do you have any ideas, Owen, as to why the economy is so weak at the moment?
Well, it's the rising cost of living, as we've been talking about, especially the rising cost of housing. And I think it's directly related to the immigration policy of the current federal government, where they are have pushed this so far in terms of pushing the population to be able to maintain growth in the economy, but at the cost of each and every individual feeling the pain and copping the pain. So with all that extra demand in the economy, especially for housing, yes, it's just causing more and more pain for everyone. So I think that the number one cause is population growth due to immigration.
Well, we've talked about the fact that even though the economy is officially growing in per capita terms, it's been going backwards. In per capita terms, it's actually contracted in 8 of the last 9 quarters. And that in turn means that our businesses are becoming less productive. Do you have any theories as to why our businesses are becoming less productive?
Well, you're looking at higher cost of wages. You're looking at inflation across the board is putting pressure on businesses, and it's becoming more and more difficult for businesses, especially small businesses, to be able to keep up. And it's so it's an issue for everyone in business, especially small businesses, and it's it's the federal government seems to be more interested in boosting our population through immigration, just to be able to keep that overall growth figure of the economy in a positive figure.
Interestingly, over the past couple of weeks, the Treasurer has talked about convening a productivity summit in August, and he's also spoken about tax reform. He hasn't been specific, though, on what that might involve. Do you think that that's what we need to improve our productivity?
Yes, all of the above. But where were these conversations 3 years ago, when they first came into power, and the first thing they did was starting to have a referendum that really no one was interested in participating in, because there were bigger issues on the table for everyday Australians that needed help. And then that failed to get ahead. And they spent the next 2 years pumping the economy full of more immigrants, which, yes, we need long term, but in the short term, we had a housing crisis and prices were going up, and there was more and more demand being pumped into it. But we've now since learnt that it seemed like they were doing that deliberately, to be able to basically stack the electorates full of immigrants that would vote their way. And as a result, they've had an election win that has been almost unprecedented, but at the same time, with one of the lowest primary votes in history. So yes, it's we've got quite an unstable economy and an unstable government really as well.
Well, Owen, I appreciate you getting up out of your bed to record today's podcast. I know you haven't been feeling well. Thank you for taking the time, and I hope you're feeling better when we chat again next week.
No worries, and thanks for putting up with my voice, my croaky voice, and appreciate you bringing the news each and every week, Nick, for us to talk about and provide value. So looking forward to seeing you next week without the croakiness. See you then.